Hi friends, the company in question today is probably an alien one to international investors watching this channel, but a very familiar one to Finnish investors watching this one. The darling of the Finnish investment community throughout the corona times, but is it a darling anymore? Harvia. Let's discuss a little bit about Harvia next. So what is Harvia? Harvia, through its subsidiaries, manufactures and distributes traditional steam and infrared saunas. The company offers sauna heaters, sauna rooms, control units and steam generators, sauna heater spare parts, sauna stones, hot water containers, steam room elements, sauna lighting solutions and waterproof sauna speakers and sauna accessories, such as sauna scents, buckets, ladles and thermometers. It also provides wood-heated saunas, pre-cut saunas and saunas interior products, ready-made saunas, infrared cabins and tailor-made infrared saunas, spa products including spa modules and accessories, steam generators and luminous and cooking and home eating products. In addition, the company offers sauna installation, maintenance and repair services and infrared radiators and sauna equipment. Further, it engages in real estate business. The company offers its products to retailers and wholesalers through a network of dealers. It operates in Finland, Germany, other Scandinavian countries, other EU countries, North America and internationally. Harvia was founded in 1950 and is headquartered in Muurame, Finland. So, who would have guessed that the darling of Finnish investment community would be a company making saunas? If international viewers know something about Finland, the country where I'm from, I bet that would be probably the former phone giant Nokia before Apple destroyed it, Finnish Formula 1 drivers or other athletes, Santa Claus, and then of course saunas. For those of you who watched my comment and podcast video on what Finnish investors own, an episode I did a while ago, know that I always avoided researching Harvia in the past because it had characteristics of a meme stock in my opinion. I know that sounds bad, but the hype around the company was just too big. I didn't even want to take a look at it. And then what happened when the music ended in the cheap money club, the stock got absolutely hammered, and we can take a look at the stock chart here quickly. As you can see, 1 year performance minus 70, over minus 70, and that is, if someone got offended by me saying Harvia, a meme stock, at least the drop throughout the last year has been something that looks quite much like a meme stock. So yeah, 70% down in a year. It went to the highs of 60 euros per share. Today trading a little bit above 15. Well, that is Mr. Market. Now that the stock has crashed, I could not help myself but to look into it. First I tell you what I like about Harvia, then what I don't like about Harvia, or rather what I see a bit risky around Harvia. Then we run it through Arctic Money criteria and ranking and conclude as always with the valuation of Harvia. So relax and enjoy the ride. So what I like about Harvia in no particular order here. I try to do a kind of a highlight list of what things I mostly like on the stock, on the company Harvia. Harvia is truly an international company with sales of 21% in Finland, 20% in Germany, 33% other Europe, 16% North America. Russia was 6% and is now obviously zero, which is a good thing. Sales also in Asia and, for example, Saudi Arabia. So the company is on a mission to take the Finnish sauna culture global. This is great in my opinion. It's hard not to like this one. Truly an international company with revenues coming in globally. Also, Harvia has lots of products in relations to saunas and spas. Just have a look at their website and you can see yourself that they do have broad offering and possibly chances to cross-sell their products to existing customers in a good manner. So they truly seem to me to be like a one-stop shop for everything related to saunas or spas. Harvia has made and is ready to make more acquisitions in the future to grow the company if they seem the acquisitions to be profitable. The management thinks big, and this is not so typical when it comes to humble Finnish companies. So I like the attitude of the management to really take Harvia to become a global player, a big company. You need to like that kind of attitude. About the debt the company has, it is on manageable level as far as I understand. The debt shouldn't be a problem, obviously. If they are planning to do big acquisitions in the future, they probably need to take more debt on that one, but as things stand today, I don't see the debt load they have as being any kind of problematic issue, not in a big scale at least. And finally, Harvia is a big and recognized player in their industry. Many people seem to highlight they have great brand value also, but here I do understand what you people mean by the brand value who talk highly of the brand value related to Harvia products. But I'm gonna disagree a little bit on this point, and I'm gonna tell you why in a bit. These were the main things I really like about Harvia. Now let's go through some things I see risks around Harvia, or rather might skew your valuation of Harvia to be dangerously over-optimistic. As we checked the stock price already, it is pretty obvious that the investors buying Harvia at the end of last year really were overly optimistic and relying their judgments on Harvia more on hopes and dreams than actual fundamentals of the company. I think the stock price decline already confirms that. So, about that brand value. Many people highlight how Harvia has valuable brands. Okay, might be true. But I don't rely in my analysis at all on Harvia's brands having big value, and I try to explain to you now why. I know people who don't drink that cheap private label cola offered in some shops, but they must have the Coca-Cola, the actual Coca-Cola product, and if the shop does not have it, they will go to another shop to buy it and possibly buy also other groceries from the other shop. I have never heard of a Finn in my life who would have skipped a sauna just because the heater was not Harvia heater. When I go to sauna myself, I don't check what brand was the heater. I have not noticed that Harvia products would be significantly of higher quality than their competitors. And I can tell you this now because I just got actually a Harvia heater in my sauna in my apartment. So I know what I'm talking about in this specific product. As said, I have not noticed that Harvia products would be significantly of higher quality than their competitors. And I have been going to saunas my whole life myself. Brand value to me is a promise of superior quality compared to competitors' products. I don't see this in Harvia, unfortunately. For real. Brand value is not something you should base your valuation on or stretch the importance of the brand value too much. Remember that brand value can also be destroyed in a heartbeat if your brand gets into a scandal or your company gets into a scandal. I was boycotting myself, for example, companies that didn't divest from Russia immediately after they launched their attack on Ukraine. This just as an example. Luckily, Harvia has wise management that started pulling away their business from Russia immediately when things got really bad and the war started, so Harvia did good on that one. This was just an example of some other companies besides Harvia. Harvia did everything perfectly in this case. Secondly, I can see why people want to, for example, wear Nike or Adidas sports clothes. They look nice, they feel nice. You can always trust their quality when you buy Nike or Adidas. They are brands to me, really. Same would probably go with driving around in Mercedes-Benz or Tesla. You can trust those cars' quality. But it is difficult for me to see how consumers would get similar good feelings on having Harvia saunas and not some other saunas. What I try to say here is that if you start comparing Harvia's brand value to Tesla, Mercedes-Benz, Coca-Cola, Nike or Adidas, I cannot agree on that one myself, really. I just don't see brand value so important in this case, in this industry where Harvia operates. You can disagree with me here, that's completely fine, but this is how I feel. Be careful chasing brand value as a good investment only. I would say brand value is a nice extra, but you really shouldn't at least place too big of a value on your valuation on brand value of company's products. I hope this little bit clear to you of what I think and why I was so critical on Harvia's brand. Hope you get it. Next, moving on. Well, it was evident that many investors at the time of investing to Harvia during Corona times overestimated the growth of the company. Everybody were updating their saunas simply because you couldn't leave your house anywhere. That demand has now already slowed down, so this is old news to everybody already. But I see another problem for Harvia in the horizon, namely the cost of energy that will stay most likely higher not for only the next winter but also after that. And there is kind of two problems for Harvia in this one. First is that people will try to save energy by any means, and they will take less saunas than usual. This is what I believe. I know the CEO of Harvia in the last earnings call which I read demonstrated that they expect sauna session to cost roughly €5 in the winter, which obviously is cheap, and even more so if 5 people go together to sauna, the cost is nothing there. So this is not a problem, obviously. But as said, people will try to cut all unnecessary energy off, and be it rational or be it not rational, going to saunas will be cut down too. This is what I believe in. And the second factor, I believe Harvia's great financial results during the Corona times especially have been in the past, as I said, during the Corona times, due to low cost of energy and kind of directly and indirectly due to low cost of raw materials. Obviously, many raw materials are energy intensive, so they correlate really positively on the price of energy overall. So kind of an indirect, direct relationship there. How do you want to see it? Now commodities have shot up, and now the question is, can Harvia pass on these rising costs to consumers? In a situation where customers are already squeezed with energy bills, this does not look good to me, this whole thing. I don't believe Harvia is able to pass those costs to the consumers without getting seriously hit on the revenue side. And if they don't want to take the hit on the revenue side, then most likely if they don't pass the costs on the consumers, the hit will be on the margins side, obviously. And another thing which I liked about Harvia was that they are brave. They try to take the company global, and the management seems pretty fearless in this sense. They do have made acquisitions and seem like they are ready to make more. Whether this will be a good thing or a bad thing comes down then to the management's execution, getting the acquisitions right. Now the interest rates are up. There is no cheap money in the world anymore. They need to be able to make the right acquisitions and not jeopardize the company's financials by overpaying for some other companies which they try to acquire. Difficult word there. But they seem to have made good acquisitions so far, at least what I have been reading. It is said that these acquisitions they have made have been of good quality, probably also good price when people don't comment on that price too much. But yeah, they need to also succeed in the future, so I don't know, maybe they are able to pull this off. So that's just a risk. When the money is not cheap anymore, if you do bad acquisitions, that will hurt your company truly in these uncertain times we are living. So to summarize shortly, I don't see Harvia as a recession-proof stock, like for example the last stock analysis I did on Carriage Services on this YouTube channel. Carriage Services is a recession-proof stock, Harvia is not. Check it out, by the way, the Carriage Services video, so you know what I'm talking about here. I don't believe Harvia is able to pass its rising costs fully to consumers. Dark clouds for Harvia will be the high energy and high material costs. Many material costs are directly related to energy and correlate positively, as said, to great extent with these commodities, or the commodities and energy correlate. Harvia's business is energy intensive. You also need to remember that they have big logistic network which they need to run with getting the raw materials and getting the final products out to the wholesalers and the sellers of their products. So their business is energy intensive. Then again, crisis always brings opportunities to us. So if Harvia is able to buy out competitors for cheap, that could be an awesome move for future once we come out of this crisis, if their competitors are financially squeezed and Harvia is able to get them cheap, well, that will be a great thing for Harvia for sure. So there are opportunities in this business case for sure. But then again, this is kind of investing in hopes and dreams and not on fundamentals. We don't know if they are able to pull this off for sure. Maybe, maybe not. I think many Harvia investors already learned the difference this year between investing in hopes and dreams and investing in fundamentals, didn't they? Unfortunately. All of this I have tried to take into account in my margin of safety when it comes to Harvia's valuation. But before getting into the valuation, let's now run Harvia through Arctic Money criteria and ranking. So here you see the Arctic Money criteria. First, do I understand the business and the industry? 0 to 5 points. I give 2 points. Products sure are familiar to me, but as Harvia is very international company, the international potential is something I still struggle a little bit to understand. What is their product's true potential internationally? I know there will be demand in Finland, but how much does the rest of the world really want to own saunas? Difficult for me to say. Let's give 2 points on this one. Could be also 3, but let's stay conservative here now. Second, does the business have moat? 0 to 5 points. A wide range of products, as said, combined with good size of the company and global sales are not bad things in my opinion, but not necessarily count for a powerful moat either. So difficult to say. Let's give 2 points. Any clear moat I don't see, but these things do help you. Does the management team and the board have skin in the game? 0 to 5 points. Management does have, here take a look at Simply Wall Street data, which I can show you on the screen now. The management does have skin in the game, and that's a great thing. The board, not so much, and I'm kind of struggling to understand myself how little the board actually owns the Harvia. So if somebody has an answer for that, please do share that with me, because I definitely would like to see my board members owning more of Harvia than the people here on the list own. So for the management owning, being a true owner of the company, I'm going to give 3 points. Next, are insiders buying the stock? Not really for a long time, except just recently Mr. Rainer Kuntz has started buying some stock when the price hit 17 euros. So we have one insider buyer, so naturally I'm going to give 1 point for that. Are super investors buying or holding the stock? Well, yeah, Dataroma.com doesn't have much information on Finnish companies, obviously. But I can't say I know any one of Harvia's owners having super investor status from the past successes of their investing. So please, if you think, please suggest one if you think there is some Finnish owner or not Finnish owner of Harvia who you consider a super investor. But as far as I know, none, so have to give 0 points on this one for now. Are people who I follow buying or holding the stock? Well, people who I follow, many of them tend to be quite international and really probably haven't looked to Finnish companies, so this will hurt Harvia's Arctic Money points here a bit, but no, nobody owns Harvia or is buying it, so 0 points on that one too. Then finally, DCF, intrinsic value, is the stock undervalued, the most important factor here in Arctic Money criteria, 0 to 20 points. I'm gonna give 8 points out of 20. Not really, unfortunately, undervalued. A bit overvalued, but let's check the ranking here first, and then I will talk more about the valuation in a bit. So these points lead us to 16-point total. And let's see the current Arctic Money ranking here on the screen now. And here you can see Harvia landing, ouch, pretty low, 13th place there. As said, all analysis points are given at the time, so the DCF and intrinsic value points, the 0 to 20 points, are given at the time of making the analysis, so obviously the stock price at the time affects to a large portion on your place in this ranking. You understand that one, these are all time bound. But as things stand, Harvia lands with 16 points to only 13th position, tying with Manchester United there. So Yeah, as said, Harvia is a little bit an underdog on this list because there is no super investors buying them, or I don't have data on that one. But that's only a small portion of the overall points. 16 points, not too high. The companies you see on the green, by the way, I do have in my portfolio. The ones on the red, I don't. And I will make I will surely make a video on how my portfolio is at the moment in the coming days, coming weeks. So you'll then know what is in my portfolio. But here, as a teaser for you, you can see the companies on the green. They are currently in my portfolio, and the red ones are not. So more on that portfolio video later. Let's now continue to Harvia's valuation. So the valuation of Harvia. The stock is now trading somewhere above 15 euros per share with using the discount rate of 10%. So I'm expecting 10% annual returns on the stock. I end up in the fair value of Harvia stock being 13 euros. That is the fair value, which I think you would be able to get 10% returns on the stock. And as you can see, it's already below 15. So as said, I think Harvia stock is still, even though it had a massive drop this year already, I still think it is overvalued. But as said, with the 13 euros per share, I think in a good normal case you will get 10% returns per year on Harvia. But this doesn't take into account any margin of safety. And once I think of the riskiness of the business for the things I have mentioned in this video, I will need to apply a margin of safety, obviously with this company, as I do with every company I invest in. And in this case, after applying my personal margin of safety, I end up with the buy price target, the target price which I would be interested to buy Harvia stock being 8 euros per share. So I think some viewers might be in shock now seeing a 70% decline on the stock this year, and here I am telling you that it is still overvalued roughly 2 euros, and for overvalued, taking into account my margin of safety, it would be overvalued by 7 euros, so roughly like 50% if my buy price target would be the 8 euro limit, and it will be. Will Harvia drop to 8 euros per share? I don't know, but if it doesn't, I'm going to be fine with that myself. I do have other targets on my watch list besides Harvia, which I'm happy to invest if they seem more appealing to me. But this is my cold, hard valuation on Harvia. When the stock price hits 8 euros, Arctic Money Christian will be interested in buying Harvia. Before that, probably not. So, what is your valuation on Harvia stock, or are you maybe relying on somebody else's analysis on the stock still? Arctic Money advice is and always will be to have your own research, your own valuation done, because only then you can reach the true conviction and peace of mind when investing or not investing in a security among wild market swings. When things get rough, you will lose your mind and do stupid things if you don't in the end rely on your own research. Next video I will make is, as said, my portfolio update, so if you want to know what stocks I have currently in my only portfolio, subscribe this channel and you will know then. See you in the next video. Bye bye.